I don't know if you can see my dog in the background. Big guy, 160 pounds, Great Dane, tanning. So, I think it was like a couple weeks ago, maybe 3 weeks ago, might have been 4 weeks ago. I put up a video about my 2-year mark on trading, and just a recap of first 6 months, first year. Once I got a playbook, a year and a half in, and then to now. So I started trading 2024, very end of March. I just counted as April. I don't have sunglasses, by the way. I broke them. So that's why I'm not facing the sun. But I was, the last couple of weeks, I have been trying to backtest a lot of different things. And I basically want to go over the things that I have figured out. First of all, I wouldn't even call myself a day trader. I'm more of a intraday swing trader. And I've got 2 setups. I've got a range setup, and then I've got, in technical terms, a liquidity sweep setup. I'm not the guy to be using these technical trading terms. I call it my trendline key level setup. But it's basically a liquidity sweep. But I've got certain things that need to happen, and I want to go over that. So, first of all, after backtesting the last 30 trades, I would prefer to have more trades than that, but I wasn't even taking my edge before that, so I just don't have enough context with the screenshot of the chart, because I've been screenshotting since day one. I just don't have enough context to know what's going on. But from the past 30 trades, what I've noticed is, so I was trading from 8:30 a.m. to 11 a.m. The 8:30 a.m. to 9 a.m. was really bad timing. A lot of fake outs. Candles were not very directional. Small candles. It would stop me out, and then it would maybe make a move. So I basically wasn't allowing it to just finish the move. And then I backtested the 9 to 9:30. And the 9 to 9:30, there are some setups, but still, it's not a high quality setup for my edge. Because, let's see what I wrote down. Sometimes you just gotta write it down. First of all, the 9 to 9:30, I had to go back to 2025 just to find a 9 to 9:30 a.m. in that range, a setup. 9 to 9:25, actually. So, just based off that, I'm just eliminating the 9 to 9:30, or 9 to 9:25, because I will take one at 9:30. I'm eliminating the 9 to 9:25 a.m. setups. And even the ones that do occur, it's still not as high quality as the 9:30 on. There are fake outs, and then it makes a move, and that's a big problem for me because I am a low frequency trader, as they would call it. I haven't taken a trade in over 2 weeks now. Nothing last week, nothing the week before that, and today is Tuesday. Yesterday on Sunday there was an 80-point gap or 70-point gap on the S&P futures, and then yesterday was PPI. Oh no, today was PPI. My bad. So the market's finally just clearing up a little bit. I've noticed since the S&P has bottomed out at 6,300 or something, and now it's gone up 600 points. That type of market time for a couple weeks is not in favor of my edge. This has happened a couple times now. It goes up very rapidly, very steeply. I'm calling it more of a excited market. It doesn't fully come down to trend lines or fully go up. No, it's more with a long setup. It doesn't fully come down, and then it just takes off. Consolidates for a little bit and then takes off again. It's not my type of environment. So I'm starting to see the environment that's fitted for my edge. Now at 9:30 a.m., the most high quality setups do a 20 to 40 point push into my entry zone. Sometimes it's more than 40 points. 20 to 50 points is what I have as my maximum. 50 points is the maximum, 20 is the minimum. So I also have noticed that, let's say it's pushing up and I'm taking an entry for a short. As it's pushing up, 9:30, 9:35, 9:40, however long it takes there, it's not breaking the low of the previous candle. So that's another thing that I need. And then on top of that, single wick rejections. They're not very common, but it would need to be a very high quality, high liquidity key level, basically. Because I had to go back to 2025 just to find one, but it was a really solid setup. So I'm only taking double wicks or triple wicks. Anything past double or triple starts to drop off in probability. So double and triple are my best entries. Double's the best. When it comes to an actual rejection at the level, not just a little wick at the bottom and then it drops, let's say for a short. Like I'm not counting that as 3 wicks. Wicks that actually hit the level. So now the 10:30 to 11. Where's that at? All right, I had to move inside. Much prefer the outside for this, but it's all good. The 10:30 to 11. So I've already eliminated the 8:30 a.m. to 9:25. Now the 10:30 to 11, where is... I don't know if... I remember it. They are... First of all, I had to go back to 2025 just to find one. So that already shows how it's not the majority of my trades. Not even close. I found 2 of them. They both happened to win, but it was very indecisive market behavior beforehand. So again, not really the environment for my setup. Now I can break it down even further. I wanted to know if about the 10:30 to 10:40. So what's interesting is that you think you know what has happened over months by memory, but until you go back, you don't really know. Like I felt like I remembered a trade at 10:35, but I look back and I'm like, oh, that wasn't even at 10:35. It was at like 10:15 or 10:20. I found 2 of them. There were 10. It's hard to tell on the screenshot. From like 10:30 to 10:40 a.m. One was October 16th, 2025. The other one was November 21st, 2025. So just based off that, again, this is 2026. We're in April right now, mid-April. And I haven't seen one of these since November 21st, 2025. So again, not the majority of my setups. And those are the ones that were indecisive. Like crazy 35 point, 5 minute candle one way, 20 point the other way, 25 points the other way. I mean, just craziness back and forth. Now, the 9:30 a.m., there were some setups that I have that are high quality that are rare. Just because it's rare doesn't mean you should eliminate it fully. Because my best setups, as in the cleanest setups that show the most often, push directly from that 9:30 open. Maybe it creates a wick, either way. And then pushes 20 to 50 points. Majority are 20 to 40 points to my entry zone. But sometimes it'll push down for 15 minutes or push up 15 minutes and then come back down. And those actually, like let's say instead of it pushing directly down, it'll push up a little bit first and then come down for the entry and then go. And those actually happen to be really big winners. And just because they're rare doesn't mean I should eliminate them yet. Again, won't make a difference if I really eliminate them or not. But they're still high quality. And then I'm getting even more specific because I really wanted to know. I needed to dial in what was going on. The biggest thing, the biggest thing is eliminating the 8:30 to 9:30. That's the biggest thing. That, like, there were entries. You know, when you look at a wick or a level that it's at, and it's 9:10, and you're like, is this it? It's close. For the entry, you know. But if you just, or at least what I'm going to do is just start trading at 9:30, the open, and then I don't have to even make that decision. And just from backtesting, most of the trades are after 9:30. This is why it's important to backtest. Now I wanted to know, let's say it rejected that level at 8:30. Is it still okay to take that trade at 9:40? But I didn't know. So I backtest, and it's fine. It looks like it's fine to take a trade, let's say an hour and 10 minutes later, or an hour and 20 minutes later, doesn't matter, even if it rejected that level at 8:30. And then I wanted to know, what days are most of my trades? Monday to Friday is what I wrote down, and then I was tallying it. And I realized that what I thought wasn't true. It's pretty equal on most of the days. Because I thought that Monday and Friday maybe wasn't as good, but it shows that it's still just as good. I think that's pretty much what I got. For the rare trades that were high quality, that pushed the other way first and then back down into my entry zone or entry level, whatever you want to call it. I wanted to know if it broke any levels. One of them didn't break any levels, other two broke levels. That doesn't matter as much to me, I just wanted to know. Still good setups if that were to occur again. It's funny, the single wick rejection that I saw that wasn't a high quality one, this was like 5% of my trades. It didn't even make a good smooth direction to the target. It consolidated like no other trade that I've had, really. So it's interesting how the rejections off of the entry zone tells a story for where the buyers and sellers are at. Because what I was noticing was the single wick rejections, like the ones at 9:30 a.m., where it just powers up or down to the level and then gets bought up or sold off very heavily, to me, is not as good for my setup, unless it's at a super clean level. Like the structure is super clean. But again, if I eliminated those setups, it wouldn't matter to my profit over the year. I think that's really it. This helped me a lot, so I figured I'd make a video on that. And I mean, if it helps me, it's got to help somebody else out there, right? Because in the beginning of my trading, I wasn't sure if trying to be so picky on which trades you take was the right way. But for my style of trading, where I'm taking the bigger moves, I do find a lot of benefit from basically using, I think they call it time theory, where it's really just a certain behavior of the market happens at a certain time. And then for me, that just happens to happen around 9:30 to 10:30, that hour. So that's where I'm taking my trades, and that's where I'm looking for an entry. I'm not taking ones before or after. And then I'm looking for a 20 to 50 point push in that direction, not breaking the low or the high, whichever way it's going, long or short, for each 5-minute candle. It tells a story as it's going towards the entry. That's what I failed to understand for the last 2 years, is that it tells a story of the probability of that trade working, the quality of it. If it starts doing if it gets really close and then it starts to stair step, I didn't realize, but looking back, those trades were low quality. It's basically, it's not really a grab of liquidity. It's more like creating new levels, new support. And then it lowers the probability of that reversing. To me, from my edge. So you got to go back and backtest and see what works for your edge. But for me, this was probably done over the last couple of weeks. It takes time. I'm only looking at the chart for, I'd get on around like 850, 840, 850. Just adjust a little bit. And then I look for an entry if it gives me a trade from 9:30 to 10:30. But again, I haven't taken a trade. I didn't take a trade last week. I didn't take a trade before that. So I didn't take a trade for 2 weeks. I think it might be 3 weeks tomorrow. And this happens every couple of months, let's say. Can't exactly remember when this happened last, but the last time, all of quarter one was good. Quarter four was good. A lot of opportunities. I just fucked up all of them pretty much. So it'll be interesting to see how I do going forward. I'm definitely the most confident in a stable way. So I'm just going to have to see.